Hi, my name is Alex Carlucci with Gustan Cho Associates. I'm going to talk to you about gift of equity. I learned some things today and I'm going to try to teach them to you the best I can. Let's start with Fannie Mae and Freddie Mac. If your parents want to gift you 20% down of equity, that means let's say the house is worth $200,000 and they'll gift you $40,000 because 20% of $200,000 is $40,000. That makes your loan amount $160,000. So you purchase it for $200,000, they gift you that equity of $40,000 and your loan amount's $160,000. Then you can do a gift of equity from your parents, 20% down, and you do the loan amount $160,000, no down payment required from you. So that's Fannie Mae and Freddie Mac. FHA says, okay, if your parents want to gift you equity, it's got to be 15% down. Now, there's a loophole to the 15% down. If your parents currently live in the house, it could be 96.5%, so it'll be 3.5% down gift. Or if it's one of your parents' investment properties and you've been living there for 6 months and you can prove it with electric bills, then it could be 3.5% down on that property. So it's really 15% down on your parents' investment properties that you do not live in. Any property your parent lives as a primary right now, they can do 3.5% gift of equity to you. And any investment property that they have that you actually live there for 6 months and can prove it, it's 3.5% down gift of equity. Now, if you have to meet the requirements of 15% down for FHA or 20% down for conventional, you want to put 10% down of your own money and then they get 10% gift, then you can do it. But the LTV on a conventional is 80% maximum, so it's got to be some combination of 20%, either partially yours or partially a gift. And when the 85% LTV, it's got to be partially a gift or partially your own down payment. And then there's non-QM loans. Non-QM loans is just like conventional, it's 20% down gift of equity. So your parents can't give you 10% down gift of equity, and you do the loan unless you bring the other 10%. So they have to give you at least 20% if you have no money to put down, minimum 20% gift. VA will do no money down, so there's no requirement, but your parents can still give you equity. So they can gift you the equity so you have a lower loan amount, but it's not required. There's no maximum LTV, so you can go 100% loan to value financing. Same with USDA. So USDA allows for 100% financing, so if your parents give you 20%, you just have a lower loan amount. So conventional and non-QM is going to be 80% loan to value, so your parents can gift you 20%. USDA and VA is 100% financing, so whatever they give you is just a bonus for you. It's not going to help you get the loan unless you have to qualify for ratios, and the lower loan amount helps, but it's not required. And for FHA, it's 15% down gift of equity, unless your parents live in this house as their primary and they're gifting this house to you. It's 3.5% gift of equity requirement. And if you live in one of their investment properties for 6 months and can prove it, it's 15%, it's only 3.5% down. So, and again, all these loans can have any combination of you putting in some down payment and then gifting you too. So that's the skinny on gift of equity. Now, I will tell you one thing, you cannot save your parents from a foreclosure. So if they're gifting it to you because they're going to start a foreclosure, they're going through a mess, they will not allow this program for any of these programs. You cannot save your parents from a foreclosure. So remember that rule. That's one big rule on these loans. So your parents are falling apart, you can't just step in and save them and use the gift of equity. So that's the rules on gift of equity. I hope you like this video. Please go to GustinCho.com and watch Mike Grace's blog on this. Read Mike Grace's blog on this, and go to Gustan Cho, GUSTANCHO.com, or call me. I'll tell you all about it at 630-915-7550. Thank you.